Okay, so we have now analyzed the regular transactions, and then we journalized them into a general journal, and then we posted them to both the general and subsidiary ledgers. So we are now at the end of the month, and we have to do a trial balance to make sure that our debit balances from the ledger are equal to the credit balances from the ledger. And then we can finally get to these couple of adjusting entries and finish out a worksheet so that we can do the financial statements. So here is our ledger that we had completed. I was just had a tiny bit left at the end of the last video. I went ahead and just completed that last little bit of posting. So this is a complete ledger. And now we're going to see if we did it correctly and if our debits equal our credits. Now, even if our debits equal our credits, that doesn't necessarily mean it's correct. Here's a $70 credit in accounts receivable. What if that was supposed to go in mowing supplies? Okay, and I put it in the wrong account. I still credited it. I still calculated the running total balance, but that doesn't necessarily mean everything is right. But it goes a long way if your debits equal your credits. Okay, so we're going to actually do our trial balance in this video on a worksheet. You don't have to. GAAP says you do not have to use a worksheet. You can put the balances just on a separate sheet of paper. If you're doing it manually, it would need to be on accounting paper. But we're going to go ahead and use a worksheet because it is very helpful when you go to do financial statements to have that on. So I have provided you with a template, and we're going to go in here and mowing company. It's a worksheet. It's for the month ended 5/31/21. Okay. Now, these accounts that are on this template are just some suggested accounts, so they're not all the same as the accounts that we have. So that's our first step, is to go through and make sure that they equal. So we have cash, accounts receivable, mowing supplies, and equipment. Cash, accounts receivable, mowing supplies. Mowing supplies and equipment. We are going to need an accumulated depreciation equipment account. We do have accounts payable. We don't have wages payable. Get rid of that. We do have capital. MM capital. We have drawing. MM drawing. Okay, sales is our revenue. It's called mowing fees earned. Okay, and let's take a look at our rent, telephone, supplies, and depreciation. Rent. This one's telephone. And supplies, expense, and depreciation. Okay. I am going to need an accumulated depreciation dash equipment account on my chart of accounts. All right, sorry about that pause there. Okay, so we're now going to, now that we have the accounts in there, we can put the balances in. So cash is 5060 debit, accounts receivable is 790 debit. Okay, mowing supplies. Mowing supplies is 150, equipment is 1200. Okay, we don't have anything yet in accumulated depreciation. Accounts payable. Accounts payable is 1100 credit, capital is 5000 credit. 1100 credit, 5000 credit. Okay, we have drawing is 100 debit, and mowing fees is 1480 credit. Okay, then we've got rent is 200, telephone is 80, and we don't have supplies or depreciation yet. Okay, so now we're going to total up this debit column and make sure that it totals up to our credit column. So I got 7580 on the debit side. Now I'm going to add up my credit side. And I got 7580. Woohoo! All right. So now I know my debits and credits are equal, and that may still mean I might have an error, but I feel a lot better. Now I'm ready to do my adjustments. Okay, so my supplies that are on hand, that means the supplies I'm counting in the cabinet that are still left over at the end of the month is 60. Okay, so if I look at my trial balance, my supplies was 150, but I need for this to say 60, so I must have used $90 worth of supplies, so that my final adjusted trial balance, 150 debit minus 90 credit, would be 60 debit balance. I want this adjusted trial balance to equal what the supplies are on hand. And you do in the adjustment whatever you need to so that this equals the 60. Okay, so that's a 90 credit. Well, I know that my debits have to equal my credit, so if I've got a credit for 90, what am I going to debit? Well, there's a supplies expense. So we debit expenses. So I have a debit to supplies expense, a credit to mowing supplies. Okay, and my next adjustment was depreciation. Is straight line, 10 years, no salvage value. Okay, so if I do that, my straight line formula is cost minus salvage value, And that whole amount, called the depreciable base or cost, divided by the useful life. Okay, so in our case, we have the cost of the equipment is $1,200. We don't have any salvage value, and then we're going to divide that by the useful life, which we were told was 10 years. If my denominator is in years, then my answer is going to be in years. So this is going to be $120 per year. Now, I'm looking at 1 month, the month of May, not for a whole year. So I have to take the 120 per year and divide it by 12 months, and that equals $10 per month. Okay, so that's how much depreciation I'm going to take. I'm going to have to credit accumulated depreciation, the 10, and debit depreciation expense, the 10. Now I'm done with my adjustments, so that's $100 debit, $100 credit. My debits equal my credits. I'm good to go there. Now I'm going to add all these rows across. Debit and debit is add, credit and credit is add, debit and credit is subtract. Cash, there's no adjustment, so it stays the same. Same thing with accounts receivable. There's my mowing supplies, I already did that. $1,200 for equipment. 0 and 10 is 10 credit balance for accumulated depreciation. Accounts payable is $1,100. Capital, $5,000. 100 debit for drawing, $1,480. Revenue, $200. Okay, and I've got a $90 debit here for supplies and a $10 debit for depreciation. Now I have to add these up. $75.90. I'll add up my credit side. $75.90. Okay,